Welcome to all. Today I'll be taking a session on ITC on canteen expenses, which is one of the burning issues. Without much ado, let's get into the topic. What are the conditions for availment of ITC? Let's refresh that for a minute. So here in section 16, it sets out that a registered person can avail the credit on the goods or the services which are used or intended to be used in the course of furtherance of business of making the taxable supplies, be it of goods or be it of services. And also obviously the credit which is relating to the zero-rated supply of exports of goods or services or supplies to SEZ unit or developers is equally available. So some of the conditions further set out for the purpose of availment of credit. So the recipient has to have the possession of the tax invoice, debit note, or any other tax paying document like a bill of entry, should have received the goods or the services. The tax should have been paid to the government by the vendor. The credit should have been availed in the 3B returns, which have been furnished by the recipient. And now there is one more draconian condition which has been put in place. That is, the invoice has to be uploaded by the supplier or the vendor in his GSTR1, and such credit has to be reflected in the 2B of the recipient. This additional provision has been made effective from January of 2022, something which has to be again judicially challenged before the various forums which are there. Coming to block credit, while the initial expectation was that in the GST law, the credit would be available seamlessly. But if we look into the fine print which is there in place now, there is a restricted list of credit which is barred to be taken in section 17.5, wherein it sets out that the input tax credit should not be available in respect of certain specified items. And today we will look and focus on the credit which is relating to food and drink, which is pertinent for the purpose of canteen related services ITC. So herein it bars or restricts the credit on the following supply of goods or services: food and beverages, outdoor catering. However, it also enables the credit when an inward supply of such goods or services is used by a registered person for making an outward taxable supply of the same category or as an element of a taxable composite or a mixed supply. Further, it sets out that the ITC on such goods and services shall be available where it's obligatory for an employer to provide the same to its employees under any law for the timing in force. So let's look at what is the restriction and what is actually eligible or what has been enabled. Coming to the restriction or the ineligible credit, it certainly sets out very clearly that the credit on food and beverages could be tea, coffee, sweets, juices, staff welfare related kinds of expenses is said to be restricted or barred. Unfortunate, but the lawmakers in their wisdom have put in place this kind of a restriction. Coming to the specific block credit of outdoor catering, the term has been defined in notification 11/2017 to say it means a supply by way of or as part of any service which involves any supply of any food, drink, any of the article for human consumption at exhibition halls, events, conferences, any functions that are event-based and occasion in nature. So what is it that is permissible to be availed? Examples could be when the canteen related credit is relating or used for the purpose of making an outward supply of manpower. So when that is said to be a taxable supply, manpower supply services is said to be taxable. And this kind of a canteen facility, which is used for the purpose of making this kind of an outward supply and being billed accordingly to the client or the customer by the supplier, then certainly this supplier can be eligible and can avail the credit. One more exception where it is an obligation for the employer to provide the canteen facility to the employees under any law of the timing in force. And herein we may need to, for a minute, look at when is there an obligation for the employer to provide a canteen facility to the employees. Remember also that restaurant services and outdoor catering services providers are taxable at a reduced rate of 5% of tax under notification 11/17 with a specific restriction to avail the credit. And due to this, if we are to look at the provision says the credit on the canteen or the catering facility said to be eligible when it is used to make a further supply of the same category. Provision enables, but the notification is restricting the credit. The provision is always going to override the notification. And remember that the notifications are nothing but subordinate to the provision. So view can certainly be taken that the ITC should be eligible, but the very conservative or the cautious approach would be not to take the credit, considering that there is no judicial clarity from the higher courts under the GST law as of the present date with regard to availment of this credit. Even when it's used to make an onward supply of restaurant or canteen or catering services on which tax is paid at 5% under 11/2017. Next, coming to the instances where there is an obligation on the employer to provide the facility of canteen to the employees, we come to the Factories Act of 1948, wherein it sets out that the governments may make rules that in a specified factory where more than 250 workers are ordinarily employed, a canteen be provided and maintained for the use of workers. In these cases, the credit is certainly going to be considered as eligible. Now we look at some of the recent developments in jurisprudence in this regard. There has been a case of Toyota Kirloskar Motors, which was in the Karnataka High Court, which then ended up and before the Supreme Court in 2021. And lately the decision has come out, wherein unfortunately, though there was a mandate under the Factories Act to provide the canteen facility to the employees by the employer, however, therein they have held that the canteen is established primarily for the personal use of consumption of employees and consequently the credit denied. Remember, this is not a decision under GST. This is something under the service tax law, which was there in place up to 2017, wherein once again there was a restriction for availment of the credit in case the facility of the canteen or the catering was primarily for the personal use or consumption of employees. So if you ask me, this may not have a direct relevance or applicability in GST, especially more so where there is an obligation on the employer to provide a canteen under the Factories Act legislation. Coming to some of the other relevant judgments which are there from various high courts, herein specifically looking at the Karnataka High Court, there has been the case of Stanzen Toitetsu and also a similar case of Ace Designers has been there. So wherein they've said that the facility which is provided in Stanzen Toitetsu, canteen facility being provided because of a statutory obligation which is there under the Factories Act and becomes a condition of service as far as employees are concerned. And the activity may be welfare measure, but it's not charity. Therein, of course, they've concluded basis that this service is being utilized for manufacture directly or indirectly or used in relation to the business and said that the credit should be said to be eligible. Similarly, where in the case of Ace Designers, where the SC was providing the outdoor canteen facility because of a statutory obligation, once again under the Factories Act, they've said that it's a condition of service as far as the employees are concerned, and the ST paid on the services, it is going to directly or indirectly get into the cost of the final product and entitled to the credit. Needless to say, these two were the decisions which were in the context of the erstwhile Sinbad credit regime, which was there up to 2011, wherein there was no specific restriction for these kind of credit. Of course, we can look at one more thing, that is Russell Chemicals, wherein it was held that there was an obligation to run the canteen under the Factories Act. It is not necessary nor number of employees required to exceed 250. However, the canteen is there so that the employees get the best food and to perform well in the factory, and consequently, the credit should be eligible. So, what we can take a cue from these judgments is that the last one of Russell Chemicals is that this once again was a decision during the period prior to 2011, wherein there was no specific restriction which was in place for the purpose of availment of these kinds of ITC. So to summarize and conclude this short deliberation, I would say that the credit pertaining to the canteen facility should be eligible without any problem, especially wherein there is a statutory requirement to have the canteen under the Factories Act on the particular manufacturer, and certainly that credit should be eligible and availed. And further, such credit should be eligible and availed when the output GST is being discharged in respect of certain supplies. Of course, when it's being paid at 5% under restaurant or canteen services, therein the credit may certainly get disputed. So with this, I've come to the end. And if there are any further questions, feel free to mail them.